Good evening. This is Duane Lowry for the DPP Grain Desk on Sunday, April 1st. First of all, the discussion, we'll get to Friday's reports and go into that a little bit, but first of all, let's focus on just tonight and what the expectations here are for tonight. Um, I think you're looking at some mixed opening calls. There'll be people expecting follow through to Friday's gains in basically all markets, wheat, corn, and soybeans. May corn finished limit up 40 cents. July did not settle limit up, and Dees was far from being limit up. So I don't think the limit up aspect of it has suggest there's any type of meaningful pool of buy orders that couldn't get purchased on Friday. So I don't think there's any big influence there. Weather is basically the same general theme. It's a favorable, acceptable 2-week outlook that continues to support a favorable or an early spring planting season and early growing season. Southern plains may have a little bit wetter outlook. They've got basically moisture opportunities in each 5-day window of each of the 3 5-day window segments of basically the 2-week outlook. Outside markets, I'm not sure I see much there. President Obama announced plans to move ahead with tougher penalties on Iran, aimed at trying to reduce their oil revenues, believing that the global supplies are adequate to handle any adversity there from Iran. And I think that it's possible that is a little bit supportive to crude oil values. It's possible that the dollar is a little weaker this week, so maybe the outside markets has a somewhat supportive tone to it, but I don't think there's any meaningful storyline there. Look for wheat to trade on both sides. I think the weather is probably a little bit bearish, but not a big change from what we've seen. I think Friday's reports um, don't have a significantly statistical meaning to wheat. Talk about less U.S. wheat acres. That's probably friendly spring wheat values, Minneapolis values in relationship to other exchanges for wheat, but I don't think it's the type of news that generates a new bullish trend in wheat. I don't think you have weather that is going to develop a new bull trend, whether that you're looking at U.S. or global weather. I don't think there's a major storyline either way. So you're probably dealing with a situation where wheat carryout will be lower than what may have been expected a month ago due to the reduced acreage, but you're still dealing with a situation that you've got an abundant supply of U.S. wheat, you've got an abundant supply of global wheat, and you're going to continue to find wheat priced in a manner historically cheap in relationship to corn and priced in a manner that will maximize wheat feeding. And I think that continues for the foreseeable future until one of two things happen. Either we have a U.S. or a global weather concern in wheat that forces wheat values higher, and I don't see that at the present time, or you get a greater confidence in the marketplace that the 2012 U.S. corn crop is doing well, whether that's because of large acres or favorable growing conditions or both, and they develop a greater confidence in the new crop pricing outlook, and that ends up shifting corn prices lower and allows wheat to gain on corn. But even such a situation, if it's based on corn prices declining or focusing on new crop values, that probably in itself is still flat price negative wheat. So I don't think anything changed with Friday's reports in wheat statistically. The only possible way there's a change is if Friday's reports causes the corn market to develop a new uptrend and we push above the highs we've seen here over the last month, which I don't think there's any chance of that happening off of Friday's reports. I think something like that to happen, it's got to come from weather, and I don't see the weather storyline for that. So I think Friday's sharp gains in wheat is no more significant than any of the many times such a event occurred over the last 4 or 5 months. All of them fell prey and ended up seeing values collapse and generated no follow-through. I think this will be the same situation. As far as corn is concerned, the acreage report in and of itself was not friendly to corn Friday, but nobody believes that will be the final acreage number, whether you're talking about corn or beans, either one. We all know that's going to change somewhat as we get to the final. The corn stocks number was definitely bullish. I think that was definitely a surprise. if the trade was looking at anything stocks related, they may have got to the point where they were bracing and fearful of some bearish surprise, not a bullish surprise. So the corn stocks figure was definitely a bullish surprise, and it definitely needs to be labeled as such. The problem is, so we've got 150 or 200 million less corn stocks than what we thought. Maybe that translates to 100 million less carry out in the next supply and demand report, maybe a little bit bigger decline than that. The problem is you've got weather that's going to start to crop off early. Temperatures are up. We're ahead of schedule in every way you could measure it. We're going to have earlier planting dates. We're going to have earlier emergence dates. Moisture is not a problem anywhere. We don't have spring flooding concerns. We're not going to lose acres this year to prevent plant like we lost last year. We still have a situation that conservative estimates about total cropland planted this year versus what USDA gave us Friday. Those Friday figures on total acreage may still prove to be conservative by at least 2 million acres, maybe quite a bit more than that. So I think it's possible to see total crop acreage go up. Whether that comes about with more beans, somewhat less corn, more beans, not less corn, I'm not sure how it plays out. But even if you lower corn acres in the U.S. from Friday's figures by, 1 million or 2 million acres, which is not an unreasonable statement, you're still talking about a new crop supply that's very abundant, doubling in this year's carryout levels, and you're talking about a situation where we're so far ahead of schedule, and the forecast suggests we're going to stay that way, that you're going to shift enough bushels from new crop supplies into old crop supplies that I'm not sure a reduction in old crop U.S. corn carryout is really that big of a deal at this point in time. So that I think there's plenty of reasons to be somewhat skeptical about the impact, the follow-through potential to Friday's performance here in corn. When you look at new crop, you still have the same situation. There's nothing bullish corn to new crop valuations in Friday's reports. It's going to be all about weather. It's going to be how the planting season starts out, the growing season starts out. All that's going to be far more important than anything we got Friday for corn. As far as beans are concerned, we always knew there was going to be a storyline where we needed to buy more bean acres. I did not think it was going to be 2012. I'm not sure it is 2012, but at the present time, that's what the trade is going to react to Friday's performance. I think it's important to point out that corn and bean valuations between the two of them have been changing pretty significantly for some time. This did not just all of a sudden happen after Friday's report was released. If you go back to when producers were making acreage decisions at the end of the year, early in the first of the year, back to December, early January, soybean return per acre, I'll say it differently. The soybean revenue per acre is up probably at least $100 an acre for the typical Midwest producer. During that same time frame, from December, January till now, corn revenue per acre for new crop is probably down $60 an acre for that same Midwest producer. So you've already had a $160 an acre shift in profitability. Whether that's enough to encourage more bean acres and less corn acres, I don't know, but it's already a pretty sizable shift in the revenue side. The other part that makes a producer decide whether he's going to plant corn or soybeans or whatever crop he's going to plant is not only the facts on the ground at that time, but it's his perception of what he thinks his opportunity is going to be in the future. For a year, everybody's been bullish corn on every day. Every day corn was going up, or they perceived it was going to go up. One of those two things. So the attitudes have been very bullish corn. And most producers looked at new crop values, and even though right now they're at the bottom side of parameters for the last year, the general feeling has been on the producer level is all those new crop values are too cheap. They're going to eventually have to go up. So they maintained a bullish attitude towards corn and didn't respond to any of the price relationship changes that have occurred between corn and soybeans. Now, however, that is going to shift. Now there's going to be much more optimism from the producer level towards soybean prices. They're going to imagine how high soybean prices could go if they got the right type of weather adversity, And they're beginning to accept the fact that, boy, I guess we are going to have a large acres, and I guess we are going to have a favorable start to the 2012 planting season. So I think that combination is going to weigh on producer sentiment towards corn, and it's going to shift more in favor towards optimism towards soybeans. So I think that combination means there's a respectable chance and a believable chance that we will see in a shift of some more additional soybean acres at the expense of how many corn acres we'll see, but probably not a lot, but enough of a shift to satisfy soybeans demands. I want to put some things out here just to maintain a perspective here. I've already talked about the fact that people have been bullish corn every day for a year, but in the last 12 months, if you look at July 2012 corn futures, it's at a range of 795 to 591. At the present time, at Friday's values, even though it was up 40 cents on Friday, July corn futures are still in the bottom 25% of that year's price range. If you look at December 12 corn futures, new crop corn values had a range of 673.5 to 523. Today's values, or Friday's values, closing values, even though they were up 17 cents, it's in the bottom 11% of the trading range for the last year. These are significant factual points that can't be ignored. If you want to look at it another way, new crop corn futures being up 17 cents finished at about 540 on Friday. For 2 months, the bottom side of a trading range, now the bottom side, I'm not talking about the top or the middle, the bottom side of a trading range in December futures was 550. They closed at 540 on Friday. So the corn market is still underperforming general expectations. And I really question whether there was anything about Friday's reports that's going to cause that to suddenly perform better. And if you look at July corn, Friday's closing values is about the middle part of a trading range we've been in 4 months. So I think it's going to be very difficult to build upon the values that we saw on Friday. And I think if the market is unable to build upon Friday's gains with some sustainable momentum, the focus is going to quickly shift back to favorable crop conditions, favorable planting conditions, and a greater focus on a better new crop supply scenario. So I would express a lot of caution about being too excited about Friday's report data. It's basically the first shot. It's the first dart thrown in a very dark room, and I think that the acreage mix can change significantly by the end, and you're talking about a potential for larger total acres than what you saw on Friday's report. So I think that the producer needs to continue to look at what the downside risk is, and I've been talking about that for weeks, if not months, and you are in the bottom part of your trading range for the last year, and you still have downside risk. So when you're looking at Friday's reports, put it all in context, and unless we see some sudden shift and greater upside follow through here this week, and that we clearly have a new market structure on our hands, which I don't think is going to happen, but unless that happens, I think a guy still has to look ahead and be fearful of downside risk. For the DPP Grain Desk, it's been Duane Lowry. Thank you.